welcome everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the possibility of Fed Governor Chris Waller being the shadow Fed president, July rate cuts, and the latest builder survey. Logan, welcome back to the podcast.
What a week. Man, I hope Jerome Powell is wherever he goes for a drink. I hope he finds a nice bar and just has some scotch.
Yes, absolutely. So we are recording this on Friday. And so far, he still has a job, hasn't been fired. And we got some interesting news today from the Fed President Waller, right? Talking about interest rates. Tell us what happened.
Well, oddly enough, when our podcast was going on yesterday, when we were talking about like what's the variables that will make no rate cuts happen, Christopher Waller, Fed Chairman Waller, who we actually endorse as the next Fed chairman, hashtag Team Waller, he came out and flat out said, I'm cutting rates July. And if everyone had to pick someone that's reliable and like not crazy, he would be everyone's choice in real terms, considering who we're talking with out there. So it would be beneficial for everyone that President Trump doesn't fire Jerome Powell. If he wants to do the shadow Fed president thing, that's fine. But getting Christopher Waller, somebody who's already at the Fed, somebody who could coherently talk about policy, but also can maybe get his other fellow Fed presidents to come along with him. Because if the fellow Fed presidents don't come along with you, right, then you got a problem. And this is why firing Powell doesn't necessarily work unless you want to fire everyone. That doesn't give you emergency rate cut. I'm going to give you guys a good example. This morning, I don't watch TV, but this morning, I saw a clip of CNBC and House Speaker Johnson was on TV, and he said we need to cut interest rates right down to like 1.5%. And even the CNBC anchors who are conservative, pro-Trump, is like, wait a second, isn't that inflationary? Or why would you cut rates that much if the economy's hot? Because that's the language that he used. It's a hot economy. A hot economy doesn't have massive rate cuts. So for myself and Waller, it's basically trying to get to neutral policy as fast as possible. And he had a very good, again, he can talk about it in a coherent way. He talked about the same points that I talked about yesterday. The private sector payrolls are slowing down noticeably for some time now. And, he doesn't want to wait for the labor market to break, then go, oh my God, we missed it. Oh no, we're shocking. It happened again, So that's a more coherent argument to make to other Fed presidents to just get to neutral policy. Now, will Trump be happy with that? No, Trump wants mega rate cuts. That's not going to happen. But at least this is someone that everyone could somewhat trust and not, go off the deep end and try to do crazy things.
Okay, so he says he wants a July rate cut. Is that what's going to happen?
No, he has no power whatsoever. Okay. It's a committee. One person doesn't matter. But he has a coherent process I want to kind of get to neutral, right? Michelle Bowman is kind of also in that camp as well. If he's Fed chairman, there's a better chance that he might convince other people to let's go to neutral. I mean, to me, when the Fed cut 0.5% last year, it really was Jerome Powell. Hey, listen, we waited too long. Okay, we got to cut 50. We should have cut a quarter last time. We didn't. And now we have to cut 50 because we waited too long. Chairman Waller can do that. I'm calling him chairman already. He can be a little bit more coherent rather than having someone like Kevin Warsh, who would be hiking rates in this environment, and all of a sudden, we'll need to cut rates. So nobody trusts him. They look at him as like a kind of a puppet to Trump. So I would be Team Waller here because it's not because he wants a July rate cut. It's because he has a little bit more of a coherent stance on talking about let's just get to neutral. And neutral policy, if the labor market breaks, you don't have to aggressively cut rates. You're already at a place. And then maybe if rates could just get down to 6%, you don't have to worry about, housing starts falling even more or losing construction labor because you do not have a wide margin anymore. If manufacturing jobs were lost in the last report, if you have manufacturing and construction jobs lost, that looks like every recessionary data line we've seen post World War II. So his point is valid. It's better for him to say it to the other Fed presidents than to have New York bully ball fire someone that you don't want, and try to, cut rates down to 1.5%.
Okay, so not gonna happen. But let's talk about the builders. Okay, let's talk about housing starts, housing permits. Where are we? Because again, this is a big part of when you look at what's happening in the overall economy. You're looking at those construction workers. You're looking at the new home sales. So let's talk about it.
Single family starts falling, single family permits falling, completed units falling. It's not good,
It's
right?
not good.
And not shocking. As somebody who wrote on July, or was it June or July of 2021, when rates go up, this is all going to end. This is not, builders are not the march of dimes. They are here to make money. And people go, well, cut prices, make it you lose money that way, right? This is part of the problem when you have people who have never run a business in their life start to give like business advice and go, listen, your job at Olive Garden doesn't qualify you as, a CEO of a home builder. But in this context, it doesn't take much to just get things going, because when mortgage rates just get down towards 6%, both times the builder's confidence picks up. Small builders' confidence, right? We're not even talking about the big publicly traded. It picks up. You can get something going here, but it's got to head towards 6 and stay there. And we're only talking about 65 to 75 basis points lower. It's not that far off, right? Mortgage spreads have gotten better this year. The volatility in mortgage rates have compressed very low. So that next stage, we're like so close. That's the frustrating part. That is such the frustrating part, because the Federal Reserve doesn't make policy around housing, but their policy impacts housing more than anything. So you have this expanding economy, but you have this one sector that has just a black eye. And I mean, a really, really big, ugly looking black eye. And you're just running around thinking, well, we're modestly restrictive. And here's this person with a black eye thinking, no, this is still here. So, but it is what it is. They do not work around the existing or new home sales market, because there's been plenty of times where housing starts are falling, permits are falling, jobs are being lost in construction, and they just go, well, the general economy, it's a late labor trigger. So I do cherish what Waller is saying. Let's just not wait this time till the private sector. And he used the same exact lines I did. He said, the last jobs report, it's like half of them is government jobs, right? The private sector jobs is not, so I'd rather have him than anyone else.
Let's talk about those construction jobs specifically. What level are they at? When you compare them in context.
So this is the answer to this question has been very complicated. Nobody understands why the builders aren't laying off people, because they look at the data and they think why they should be firing people. Like a lot of people who want to see the U.S. get into recession. One group of people, guys, just one. They don't get it yet. And we've explained it in many articles, and we've talked about this. New home sales are still at 2019 levels. They are very elevated compared to the existing home sales market. The builders have a massive backlog, the biggest backlog in the history of America of homes that haven't started yet. It's not a lot. It's like 119, it's 117,000, whatever it is. It's not big in context terms to 147 million total housing units, but it's enough for the builders to go, oh God, we just need 6% mortgage rates. We get things going. So they are keeping the labor as elevated as possible, because they've seen mortgage rates go down twice to 6%. And then the builder's confidence picks up. The forward-looking traffic data picks up. And that's how the builders operated for many decades. But now it's like, you're seeing single family permits fall. Now the builders, the big publicly traded builders, which are not part of that index. I mean, the home builders confidence index is near COVID-19 lows, but it starts to get more expensive, right? Profit margin. I mean, imagine if the builders didn't have the profit margins this time, things would have been worse already.
Wow.
So
Yeah.
here we are trying to hold everything at bay. And that's why job growth and residential construction workers are not like booming at all. And we have to remember a big portion of that is remodeling work. There's a lot of homes that are old that need a lot of remodeling work. So that's keeping things going. But in terms of housing construction, like single family homes and multifamily apartments, we're at COVID-19 early recession levels now. So it's one of these things to where the data line hasn't broke. People don't understand. But if you explain it this way, if new home sales were below 2022 levels, single family permits would fall more, single family starts. We're just quite not there yet. And it's just it's the most complicated housing starts cycle ever, because you really have to break the data down and try to explain things that traditionally, I mean, for 2 years now, people said, why aren't they laying off? Why? And then when you look at it that light, they still keep their employment. That's why it's so frustrating. It's just 65 to 75 basis points lower, and we could get this going, but no.
It would change everything. It would change so much. We've seen that before. I think that's
And we
interesting
don't have
because
to worry about home sales booming higher and prices going up 15 or 20. This is where being soft really hurts, right? And we say this because when we always bring this up, when mortgage rates get down to 6%, the Fed freaks out. It's what I call the COVID-19 policy. If you suppress your people from buying homes, having sex, having kids, moving, then you suppress inflation, right? Except if you stay restrictive long enough, then you destroy the future production of housing. And then here we are again, right? So where in the previous decade, we had low mortgage rates, affordability was much better, but it was the weakest housing recovery ever because there were so many existing homes available for sale. The builders were at a complete disadvantage. That was my whole working theory last year, starting back from 2010. It was going to be the weakest housing. Here it's a little bit different. New home sales are outperforming, right? People need shelter. They offer lower rates. Boy, it's a deal, right? So it's one of these things that it's totally frustrating to watch, but the Federal Reserve doesn't make policy around housing, right? Unless jobs are being lost or foreclosed, something like that. They don't really work in that environment. So we're here, and we don't need much. And it's not going to be like a booming housing market. So home sales aren't going to go back to 6 million anytime soon. Home prices aren't going to go up 15, 20% or anything like that. But it gets just a little bit of traction. You can get permits growing a little bit more and something workable than this.
I think the interesting thing is that just that context you provided about like typically the existing home sales, that's where all the action is, and new home sales is such a tiny percentage. It's just because we've had this complete flip flop in the last couple of years that the new home sales have become such a big deal, right? I mean, there's still a tiny number, but it's just that existing home sales have dropped so much.
So existing home sales are roughly around 4 million. The last new home sales report is around 623,000. The other one was like 741. So just kind of average that out. If I took the equivalence of existing home sales and try to tag it to new home sales would be under 300,000 today. We're already laying off probably half the single family workers at that point, so new home sales have outperformed because advantage, disadvantage. Active inventory was really low. Here are the builders going, oh my God, they can't give their buyers sub 6% rates, but we can. Oh, everyone come here. Brand new house. Look at that ugly 1965 carpet. You don't want that. Look at that wallpaper. Now, come here, bells and whistles. 4.5%, 5.5% mortgage rates. Come on. And people go, yes, please. But the completed units of sale, which is really the key data line for the builders, that has finally caught up to them to a level to where if you look at the history of U.S. economics, permits are just dead. They're not going to do it because there's too much supply there. So they're just like sitting there hoping that rates just go back a little bit lower so they can start building those homes and finishing them and selling them. And it's a complicated business, but it's one of these things where we wrote that article a few days ago. The builders are in stress where the existing home sales market sales crash in 2020. We've been basically hovering here. And their inventory growing is a benefit to them because it makes housing more affordable in the sense that price growth is slowing down, wages grow, in those various two different sectors. Hopefully everyone can see. This is why we have Fight Club rules. What are the Fight Club rules, Sarah Wheeler?
You do not mix up the new home sales market and the existing home sales market. You don't cross the streams. It's like Ghostbusters, okay? Don't do
Yes,
it.
you
Bad
don't
things
cross
happen.
the streets. It was funny because stock traders, again, guys, ladies and gentlemen, boys and girls, you do not get housing advice from middle-aged men podcast stock traders. They are the worst. They are simply the worst. And a lot of them, what they did is they looked at the new home sales. We still have clowns. And when I mean clowns, I'm talking about the most grotesque looking clowns in the world that are sitting there and saying existing home prices have been down for 3 years because they're looking at the census data for new homes and thinking that's existing. Oh, God, there are some men who just need to read a book. In any case, they see the monthly supply for new homes is like 8-9 months. So they think that's millions of existing homes. Why? They never read a book. And when you don't read a book and burn them, you're not an educated person. I was like, that's not the existing home sales market. Yes, it is. No, it isn't. Show me the numbers of completed sales. They're like, what? You have no idea what I'm talking about. Why? You're a stock trader. You're a really bad stock trader too. And your podcast sucks. Go read the completed units of sale. And there you go. Look how many homes that is. They're like, oh my God, that's only like 75,000. Oh my God, is that millions of homes? It took me 2 years to get these people to realize monthly supply for new homes doesn't actually even mean completed units of sales ready to go, right? There's homes that are under construction that haven't even started construction yet. And 2 years, 2 years to get grown ass men to realize how to read. Two different subjects, like two different existing homes. Inventory is raw. It's open. There it is. Those are homes available for sale. Go in there, make an offer. There you go. The new home sales market is different. They have categories of construction, right? Haven't started yet, in construction, and then completed units. But man, that's why we stress reading. Even if you couldn't read, visually see the charts, right? So you can't be, if you're dumb and blind, then I get it. Okay, but then you could hear. If you can't hear, you're probably out of luck. But come on, people. So that's why we don't
No,
mix them up
it
together.
is really interesting. I think the home sales thing in general, because if you think, oh, that's happening every month and you're saying that's completed, you get so much more than 4 million. I mean, that's why they'd have to know, like, these numbers don't add up. They don't add up.
Sarah, men in this world, men
Just
do
men,
not
huh?
like to read, right? Okay, so we try to do crayon charts, and it's just we've made some progress. Okay, the nerd tour, everything we've done, social media, we've made some progress, but there are some people that are just born in after 1913 that just can't escape the reality that they live in a world where there's a Federal Reserve, and they just can't. And these are the people I challenge and debate all the time. Lord have mercy, if I could get every single one of them live on camera, I will light them up, every one of them, if I could, but they won't.
They
Probably
won't.
good on their part.
Okay, so this weekend, which by the time this comes out, already it will be live. The tracker. What should we look for?
Yes. So finally, we got the 2 weeks of crazy July the 4th data out of the system, and then we could go back to normal. So we want to see mortgage rates have ticked up a little bit from about a month ago, but we want to see if we could go back to the stabilization. Before July the 4th happened, we had 2 weeks of stabilization in the data, meaning that inventory wasn't really growing, even though it's the seasonal time that it does grow. Price cut percentages were kind of flattening out. The new listings data wasn't growing as much as it was. So there was some stabilization in that data point. We've got enough inventory growth this year to be A plus, A plus, 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 plus. I love 2025 for the inventory growth. That's not going to change. But we always want to teach supply and demand economics by the slope of the curve of our tracker data. What we believe is the most efficient and most functional way to look at live, fresh housing data. And all of you guys, if you wanted to, you go to Altos Research. You could get a free zip code. You could just understand what we're talking about more. Or the tracker data has it every weekend. So I just want to see if we get back to that, or has this little move in rates higher changed that? But we can get the July the 4th story out of there and then push forward out.
That is exciting. Okay, everybody, check out the tracker. It's on housingwire.com. You just have to go to the housing market page. There it is every week, and you can look at the archives and see everything that we've done. Logan, thanks for keeping us up to date on all of this.
Team Waller, Fed Chairman Waller, Christopher Waller, go Team Waller.
But
Yes.
not anytime soon. Just as a shadow Fed. We don't want.
I don't care. I'll take him tomorrow as a shadow Fed as long as I know it's him. Right. I just don't trust anyone else. Right. I know he's going to be legit. So we are hashtag Team Waller, hashtag anybody but Warsh. Warsh. What is it called? What do you say? How do you say it, Sarah?
It's like wash, only Warsh, like from the
Warsh.
Midwest.
Okay, there we go.
Missouri. Yes. Okay. So we know where you stand. We will see what happens. Thanks again, Logan.